Okay, good morning, traders, and welcome to Trade the Structure. So now we're just going to run over the morning Jumpstart and the action from overnight. Now, it was pretty well contained. Obviously, we've got FOMC will be later tonight or the early hours of tomorrow morning around 4 a.m. Sydney time. That's when they released, and it's expected to raise rates. So US market was pretty much just in a holding pattern, just sort of steadying itself, a bit of risk off. Everyone's sort of squaring up some positions ahead of the number because you never really know what they're going to say. Okay, we don't know whether they're going to come out and be more aggressive, less aggressive. What's that going to do to the market? But everyone's sort of squaring up before that. It seems like that the market was kind of choppy on the Dow, the Nasdaq, which we'll take a look at later. Fairly choppy, holding some levels, nothing key, but yeah, just sort of chopping around up above and below supports, I think, on the Dow and the Nasdaq. So yeah, everyone's just sort of ready and raring to go for that FOMC meeting. Now, that I would expect we're not going to see much today, coming to the start of the Asian session. The Nikkei is closed, as you probably know. I think it's closed for today and tomorrow, actually. The Hang Seng's open. China's got a holiday, bank holiday, same as obviously Japan. So we may be well contained, I'd say fairly contained. I don't think anyone's going to be taking massive swings at the market ahead of FOMC, especially to the upside as well. So I think share traders in the ASX are going to be sort of maybe holding off. But in saying that, the ASX and the SPY and everything doesn't look too bad at all. So we'll just jump on that in a minute. Now, just before we get going, it'd be great if you could leave us a like and subscribe to the YouTube channel. And feel free to take a look at the website, www.tradethestructure.com, and subscribe for more free material. So, yeah, a lot of educational material putting out there, ideas for trading to help you along your way. So jump on there, subscribe, leave us a like if you do, and that'll be fantastic. So let's get into the ASX. So this is a 5-minute chart. This is the SPY 200. So you can see the market has held, the thing is it held this level nicely, 72.65, bit of a flush there, then regained that lost ground back above the level and just held that a couple more times. Held that yesterday, closed about here. So held above that yesterday and then again a retest overnight trade somewhere in the European session. And then we bounced back up. So the way it actually, we sort of edged lower off 73.36, to me looks like they're not prepared to break that. Meaning they're probably going to wait and get some better share prices today. But it does look like there is the chance that this level is going to hold. Now, if we click over to the 30-minute chart, this is the potential. So this is your first leg up. This is the pullback. So that's the pullback we just described and the holding of that 7,300 or support level. Different prices, obviously, on the SPY. But it looks like that's what was holding. These two inside levels, that was the level overnight before we lifted up into that resistance zone. So to me, the way it's sort of holding there and the way it sort of, it consolidated basically just below the level, we could get a bit of a pop, okay? And that I wouldn't be surprised at all if we get a bit of a pop. Now, on the flip side of that, we could easily hold this as a lower high. We may hold that today, sort of grind our way down today, and then the US comes out and says they're a lot more aggressive towards interest rates. Market sells off, we come down, and that's a confirmed lower high. But it's only confirmed lower high when it gets through that sort of 7,300 level, which is 60 or so points away at the moment. So it does look like, technically after this flush, and we've got the fact that it's holding this 73, it looks like it's just consolidating, holding a a higher low just below that 73.66 for another leg up, which could mean that so that's the initial leg up. If you expand that out, we're taking up to somewhere around 75.10 potentially as the first port of call for another leg up. But, there's a lot to go before that can happen. All right, but that's just what we're looking at. Be prepared that we do run on today without we're not going to wait around for what happens with the FOMC, and RBA's just raised rates, so we're sort of off the cards for a while yet until probably next month when they might do it again. It just depends what inflationary numbers come out between now and then. I mean, really, when you look at it, that raise, they did raise it quarter point, 0.25% or basis points. But that's nothing much in the scheme of things. So the last time they started this interest rate drop, falling cycle, whatever you want to call it, it was a well higher. We're at, what are we at now? I think 0.35% at the RBA. At the moment, it was up around 7.5%, maybe 8%. At its peak, just coming to the GOC. So we've had that massive rate rise. Rate rises dropping. So interest rates dropping. Big cutting cycle. And now we're going into sort of a rate rise cycle, but we're going from a hell of a low level. So I think the news is going to love talking up, and I've already seen major headlines. Families in for it, they're shocked with the life. Got to tighten their belts. All these sort of, beating the drum of that interest rate rising cycle. Yet I don't think it's going to get out of hand. We're going to probably raise it a couple of times, maybe a couple of times this year into next year, just to cool things, cool inflation. But if those inflation numbers now start to filter through that are not as as high as what we can expect, and a lot of it's got to do with China as well. Their industries, they're slowing down, so it's probably making inflation a bit higher because people are not getting the goods, paying up more for it. There's a lot of backlog at the moment, so it could be that is going to be the case. All right, so I'll see. We'll just wait and see what happens, but I don't think the RBA is going to go to town on interest rate rises, which would mean that it's still going to be at a relatively low level. It's just whether it's going to cool the market enough or not, and what the Fed does really. Uh, that's all we're worried about. What the Fed does, how aggressive they're going to be, to what kind of a sell-off potentially we could expect. All right, so we'll get on to let's just get on to Asia before we get over to the US. Now this is the Hang Seng. It popped up. That was on the Friday. Okay, we've retested that level quite a few times now, and then it opened up yesterday, flushed down into 2690, held that level straight back up into the highs. Okay, so there's an extension. You got a major level at 21040 and an extension level where it's just been popping through that major resistance zone to 21190. So it's tested that yesterday, fell away, and just basically stand its ground into the US close as the US market sort of just churned around, chopped above and below support levels. So I would expect, I wouldn't expect the market to get out of hand, but it could easily flush higher, and then you get a lower high to work into below that level. But I'll be looking at this 21,190 as more of a key level to work off today. I don't expect we're going to get a big sell-off today. I mean, it could easily happen. I think the underlying index on the daily chart is starting to run out of steam. On the 30-minute chart, it's also started to run out of steam, and momentum starting to roll over, which means that we could get some profit taking as the market rolls over. Profit taking today, which could mean that's why I'm sort of eager to see a flush high. I think the market, if it wants to go down, it'll flush high. If it wants to go up, it'll flush lower on the open. Just to drag in and trap some traders, which it did yesterday, wanted to go higher, so flush down on the open. So we'll wait and see pretty much which way the initial flush goes, and we'll work it off from there. Japan closed today, bank holiday, so I won't be trading this, but it is up near sort of a resistance zone. We're going to wait till the futures market opens to really get this. Is just CFD pricing, so it could chop around, do nothing, and then readjust later on once the futures are open. But being a bank holiday, I don't think they're open today, so it's really just CFD pricing we're going off. That's why I'm not really interested on trading this one. I'm going to stick around SPY maybe, or the Hang Seng. But either way, we've got a level at 27,127, and then it's higher low at 26,818. It's holding the trend up. You've got the first leg up, initial leg up. Maybe that's about where it can extend to. Might flush through here, retrace. But either way, we're going to wait till the market's properly open. Over to the US now. Dow, like I said, you can see this is about the open 11:30 of the index, the US market. Basically flushed lower, flushed higher, flushed lower, and it's back to where it started roughly. Give or take. It's Dow ended up a few points, Nasdaq and the S&P, both up a few points as well. Nothing major, but it was enough just to keep the market in the green, keep the market happy. But really, we're just chopping around levels. Okay, so everyone's, like I said, in a holding pattern coming into the FOMC. Not so much what they're going to raise rates. Maybe they raise a bit more than expected, but it's more about the statement. What are they going to say? How are they going to continue to have an aggressive stance towards inflation and interest rates? So the market's going to have to readjust once they know more what's coming out, what the statement is going to be, what the Fed's got to say. So for me, I'm not really interested too much in trading this because I think it's going to be choppy up until I've drawn these levels up, drawn that sort of price action, what I expect, but pretty much it's that key level 33,165. Either be working off, but like I said, you work off longs off that, it can easily retrace. You work shorts off, it can easily retrace back up again. So you just want to wait and see what's happening later tonight, which way the market could be heading. I mean, there could be a bit of a heads up. Everyone likes to think no one knows anything ahead of time, but unfortunately, I think they do. Things are leaked. So if you get some sort of action where it starts to take off and you get a shallow pullback, then you might want to get long. Okay, and the same on the downside. It starts to fall hard and then you get a shallow pullback back up and it starts to roll again. It could be the start of a good leg down or a good leg up. All right, US tech, same as pretty much the Nasdaq. We're chopping around between these two levels, 13,025 and 13,117. And again, same as Dow, I'm not going to be interested in too much until what we know what's happening with FOMC and the Fed. All right, but either way, that's the sort of key levels. You can see it's flushed down above and below 13,025, worked its way back up to 13,550, straight back down again, took out the low. You can see, took out the low here, pop up, took it out again, but it's been supported. So these kind of, this level here, it was supported here, and then again here. Okay, so like someone's supporting it below that level, or someone, Insto, whatever it is, supporting it below that level, maybe expected that's the base for what we could expect. If that's the case, then we should be heading higher if that's what we're looking at. But depending on how, again, back to the FOMC, depending on what happens there, we could easily roll over, depending on how aggressive they expect to be. Now, if they're not going to be that aggressive, you could get a bit of a retracement. So we've had a good move down. You can see right from this what was it, 15,295 zone. It's worked its way right down, and we're starting to get signs of a bit of a level holding, as opposed to some acceleration. Acceleration lower, chopped around, acceleration lower. We sort of accelerated lower back into the same sort of area. Tried to go again, and got supported. So we've lifted back up again, just holding above that 13,025 for now. So yeah, I'll be waiting to see what happens. I wouldn't be doing too much with this up until 4 a.m. Sydney time. Not that I'm going to be up, but that's probably what we'd be looking at. The DAX. Now the DAX is it's a bit volatile, not really volatile, but it's swinging around as well. It's getting choppy. There was some really good intraday action. So if you're interested, jump on, send us an email to tradethestructure@gmail.com, and I'll send you the Discord channel. You can jump in there. So I put a lot of posts up there of intraday trading action, and the DAX is doing really well according to what I teach and what I talk about a lot. The sort of strategy that I'm looking at. All right, there's some really good setups. I think it yielded about 90 something points yesterday by just sticking the same plan, the same rules. So there is some action. The fact that it's choppy is one thing, but if it's choppy sort of with some volatility, you're going to get those setups, okay, play out on the smaller time frame chart. So it's something to trade intraday. But we'll see how this goes. Coming again, there'll be all eyes of beyond FOMC. We might find that European session tonight is going to be a bit meander around, above and below. I wouldn't expect too much. I wouldn't expect it to get out of hand above 14,043, even if it does push into 14,172. But I think that's going to be a bit of a long shot. More likely that it's going to sort of drift down. Generally drift down because no one wants to buy it too much ahead of the number, and more likely that people are going to edge out of some positions, square up ahead of FOMC. Okay, so I would be more biased down than anything else. Now, as we're talking with SPY, that's your first leg up, your secondary leg up. If we go over to the DAX, that's your first leg up. We've retraced. Now, if this level does hold and this higher low holds at 13,940, then we've got a potential for a secondary leg up. Okay, because once we start to get up to this level, 14,172, it becomes a bit more obvious. We've got, big flush down, big retracement back to this level. So you got leg, big retracement, pullback, and it started to hold at a higher level. Okay, so that higher level will be confirmed once we get to 172. Probably going to drag in some more buyers, extend, maybe even extend all the way up to 14,560. I wouldn't expect that, but again, on the flip side, it doesn't mean that's going to happen because I've drawn a pretty line. We could easily just roll over from here and start to roll over, get through 13,940. Then you've got the flip side. You've got a lower high starting to confirm, and market can get through 13,840 quite easily and really start to accelerate back on the downside because the trend has been down. Everyone's sort of just waiting to see what the Fed does, and then how's that going to affect Europe? Europe are probably not in such a great position at the moment. Inflation is not quite as high. They're not looking at interest rate rises, so economy is not doing as good as say the US. So we'll see. Look at FTSE or the UK 100. Now that had a big retracement. So that was it Friday? I think it was Friday's move down, and it's been retracing since. So we've been grinding up, and it opened yesterday somewhere around. It was right here, yeah. So it was that first green candle. So it basically popped up yesterday and retraced. So I thought it might sort of stick around 74.94 and just sort of chop around that level, but instead it rallied straight back up. So we're looking towards these highs at 75.96. So it'll be interesting to see whether that level holds or whether we roll again from there. We've had some selling in there before. The market was toying with the level here, pushed through, retested it, pushed through, and okay, worked their way back up, failed the third time, pushed down, reset, tried to go again. So if it's going to fail off that level again, I would expect it to be a little bit bigger fail because that's a leg up, that's a pullback, that's corrected that leg up, and once it fails again, that's a double top, on sort of this 30-minute time frame. You've got a double top to work off or retest fail. I'll be looking for a shoulder trade, meaning maybe something like this works down, and then you're working into a shoulder, a lower high, and the market moving right down again, and potentially going back into the support zone around 73.39. If not, this could easily just continue to hold minor higher lows and push its way back up to 76.55. All right, let's get over to the currencies now. Let's look at the US dollar. Not a lot of action in the US dollar. This is exactly what we said yesterday. It's going to be sort of range bound up until FOMC. Okay, and it's doing exactly that. You got this flush lower, retrace straight back again. So pretty much finished where it started. The session didn't get out of hand. Maybe just a bit of adjustment, a bit of a selling coming to level at 9 o'clock. I don't know if that was a number induced, but that bit of selling coming in there. European session, start of the US session, basically bounced straight back again. So it was probably just trying to flush out some buyers just in here, just chop around. But that to me is consolidation. I would expect that kind of a action, maybe another flush lower, a bit of a pop higher, maybe a pop higher from here up into 103.75, then flush back down again ahead of FOMC, which is 4 a.m. So you've got quite a bit of time ahead of you. Quite a few candles to play out on the 30-minute chart, and but still, the idea is that we're just going to chop around here until FOMC. There's nothing that's going to move the market until then. All right. So I wouldn't expect if there's a massive sell-off on the US dollar, then someone's let something slip a little bit early. And somebody knows something ahead of that 4 a.m. mark. So what did the euro do? Obviously, the euro's flushed up and bounced. So just like I said, mirror of what the US is doing. But we still got this support zone here at holding at 104.83. And again, if that US dollar goes up or down, the euro is going to do the reverse. Not the thingo. The euro currency is going to do the reverse. So at the moment, it looks like it's basing. You've got a high up here at 105.93. We've got some inside little minor levels, resistance zones up here as well, just below that level. And you've got support coming through at around, 104.85, thereabouts. Okay, so I would expect unless the US dollar breaks to the top side, breaks out of the top side, 103.75 and above, the euro, unless it does that, the euro will hold above this level. If it does do that, then you expect another big sell-off into the euro, and that's where it's going to put pressure on the euro region, things like that. So we'll wait and see how that goes. Again, I wouldn't expect too much ahead of the number. Pound. Now the pound is sort of, again, just chopping around as well with this bit of a sell-off, bounce back, another sell-off. So it's just linking up with the US dollar, but essentially, this is your downtrend, and we've got some sideways action at the moment. We've got the action just sort of chopping around sideways through here. All right, so I wouldn't expect to get out of hand on the downside or the upside. All right, but more just sort of consolidating around these lows, around above and below around 25.15. Pound, Aussie dollar. Aussie dollar doesn't look too bad. You've got a good little support zone down at, say, even down at 70 cents even, and just above that you get a higher level at 70.33. And now what we've done is broken up through this minor level at 70.75, consolidated, held that. So to me, that looks like we could start to push our way up to 71.66. Maybe we may do that ahead of the number tonight. And we may just do that in the Asian market session, in the Aussie session. Just push up, so there could be a higher low to work off, and see if you can work up to 71.66. It gives you about 60 pips in that, but I wouldn't be holding the hell out of it, waiting for serious highs to come through. But it does look like sell-off. The sell-offs are getting is bigger retracements here, big retracement here, big retracement here. In this leg down, there was next to nothing. Okay, good retracement. Okay, couldn't hold it up here. Another push down, took out the low, not by far. Didn't go through that level, only by a few pips before we get another retracement, another sell-off, another retracement. So that we're not getting through the lows too far, and we're retracing quite hard. Good retracement up here, straight back down again, took out the low, and started to retrace. So whether this is the retracement, then we start to edge our way back down again. But we'll see. But it looks like potentially that, to me, that structure, the way we're holding the 70, 74 level, that we're going to start to press higher. And that's more got to do with our local interest rate rises. Look at the yen, US yen. It's in holding pattern at the moment. So again, it's that 130 zone. It's chopping around there, just testing the resolve of the BOJ. We won't get into too much now, but go back on the previous morning reports. You'll see we've been talking about that. That's their line in the sand for intervention potentially. And the market's just testing their resolve, really, just seeing what they're going to do. And of course, if the US dollar is not going to do anything, we're not going to get shorts, any short covering into the yen. And then short covering into the yen should see buying pressure into the yen, send that pair lower. Okay, excuse me. But for now, it's all just a holding pattern to FOMC. So let's get over. We'll look at actually, no, we'll just look at, we'll go to gold here. Now gold, yeah, a bit of a retracement off this zone, bit of a bounce. We've got a little level in there. We've got it's continued potentially holdings, but down move, pushed into that 1850 area, bounced off 1850, back up again, sort of retesting where it broke down from around that 1874. Whether this is a high low to work off or something like this, whether that's going to hold, that level's going to hold, and we're going to work our way back up, or we're just going to roll over and completely forget about that level. And we're going to start to expand to the downside. And I'm still looking sort of for a move down to maybe 1830, 1840 thereabouts, just to extend on that leg down, that overall leg down. I think that's been well and truly entrenched. And it's just whether this is a bit of a pattern. I'd feel that it's more got to do with the US dollar and FOMC than anything else. Okay, it's hard to position yourself, to jump in and get long in this, because the US dollar could take off, and really pressure gold down. It hasn't proven to be an inflationary hedge. I don't think it's going to be a safe haven unless the market starts to melt down, and we might get some love into it. But for now, all those sort of reasons aside, it's not really doing too much, and I wouldn't expect to do too much until FOMC. Oil, check the time, it's going over 20 minutes now. So oil, it's backed off from that 105 area. We spoke about the last few days. We still got the market is holding above 99.90, and it's that bigger trend. What's going to happen there? Whether it's this bigger trend. Once it loads, a contraction down on the daily basis, the big contraction down. Like I said, double bottom, high low. Which way are we going to go from here? Are we going to roll over from here? Which could easily do. It doesn't mean just because we've got some contraction, we've broken up and out of that contraction that we're going to continue higher. We've got resistance at 103.30. That's still an area where it's a strong area too. Quite a strong area. We've tested it here, fell away, retested it, fell away, retested it, fell away. So it is quite a strong area. So this could be a lower high, which means we've got first, secondary move down, potentially taking us through 99.90 and even down to 93.93 to retest those lows, just depending on which way. For now, I think this action's it's down, it's biased down. We've got a good spike up, and it's been sold into again, so we could get another spike up. I mean, for now, it is relatively choppy. There's no clear direction longer term. It's not trending up or trending down. It's kind of choppy, but on a bigger time frame. All right, look at copper. Copper bounced back a bit last night, and that's that flush. So we spoke about this yesterday. That's your first leg down. Once it loads, okay, your first leg down, you pop back up, consolidation sideways, that become a lower high. That's your secondary leg down. So that's your expansionary leg down, right? And I generally look at patterns of two. Okay, when they're two sort of moves before you get some sort of corrective action. And that's what we call your volatility projection. Okay, that's your volatility projection down. And we happen to come into that zone support, which is from prior. Anyway, won't find that at 429.45. So that's coming there, big flush. We're discussing this yesterday with a flush, and we get a bit of a bounce back, which now starting to look like that. We've got this big push back up, pull back, holding a higher level before we starting to react back up. So it's all around that 429.45 area. So I'd be looking for maybe something like this, another expansionary leg higher. And again, that is going to be to do with US dollar. If US dollar starts to fade off the current level, fade lower, expect copper to press higher. Now let's get over to just a couple of Bitcoin, and we'll finish on Ether. They had a bit of a sell-off yesterday. They've come to support. You got Bitcoin and both Ether as well coming to support zones. So really, it's just whether that's going to hold. We're going to get a bit of a lift off that level, or we're going to start to break through. Okay, so I'll be sort of biased down on these ones. I think the way it's come off there, you sort of got to sell off here, mild contraction, another push back down and retest those, bit of a bounce back, flushed out that high before we've started to roll over, and it looks more like what we call a tap pattern. It's started to unload to the downside. Yet to be seen just yet, and obviously it's got to do with what happens tonight. It's following the equity market, but it looks like a bit of nervousness. No one's willing to step in front of that and buy it at the moment, because we're just waiting to see, hang around and see what the US do. But you can see downtrend, well and truly downtrend. You've got obviously these moves up to flush some people out, and we continue to downtrending as well. So it looks like this, to me, looks like it's set to break down through 37,700. But funny things that happen, that could easily hold up, and we could do something like this, bounce back off. All right, so that's all we're going to talk about today. Like I said, thanks very much for joining me. If you like what you hear, it'd be great if you could subscribe to the YouTube channel, leave us a like, and help us spread the word. And feel free to join the community on our Discord channel. Look at the website for more details. Subscribe to the website, free, and just jump on there. Educational material, anything you want to ask, you can jump on Discord and ask through there. All right, guys, enjoy your day, stay safe, and we'll speak to you tomorrow.